Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of rising worldwide factory confidence. But first, in the US, personal income rose 0.3% in April, as expected. However, personal spending on consumption disappointed markets, falling by 0.1%. Industry needs American consumers spending, not saving. This consumption is 70% of US GDP and is the engine of world trade. The latest American Consumer Sentiment Report came in below expectations at 81.9. In contrast, the Chicago PMI jumped to 65.5 in May, well above market expectations of 61, and the April outcome of 63, on much stronger orders. Nationally, US factories expanded at a faster pace in May, while factory growth eased in Europe, pulled down by France. The latest PMI data for Australia was also out yesterday, and while much improved, it still shows their manufacturing sector is declining, just at a slower pace. The seasonally adjusted index rose 4.4 points to 49.2 to remain below the 50-point expansion level. There was a decline in confidence following the federal budget, although there were rises in production and new orders in the month. These sub-indexes improved to 51.6 and 55.1 points, respectively, both very strong. Employment, however, contracted further in May, as did deliveries, inventories and exports. China's official PMI, the one geared towards larger state-owned enterprises, was also out overnight with small but positive rises as factories expanded in May at their fastest pace in 5 months. This, along with the good US data, helped raise global equities, with most markets higher. The RBA will review its 2.5% cash rate target later today, but no changes anticipated by markets. That key policy rate may not stay stable for long, however, if yesterday's dive in building consents and business inventories are to set a pattern for 2014. They were pretty ugly pieces of data for Australia. Yesterday it was reported that home prices in Australia's 8 biggest cities fell 1.9% in May, the biggest monthly drop since December 2008. All major cities except Darwin and Canberra recorded declines, with Melbourne seeing the biggest drop of 3.6%. This is more of an issue given that one analyst revelation overnight that 95% of all extra credit extended by banks since mid-2012 has financed residential or commercial property. Today, both gold and oil are down, both quite sharply. Oil is under $102 a barrel in the US benchmark, despite the driving season demand, and gold is now down to $1,242 an ounce, its lowest in 4 months. Even lower, CDS spreads are touching their 5- and 6-year lows in both the US and Europe respectively for investment-grade bonds. In trading today, US Treasury 10-year bonds yields have jumped back up to levels they were early last week. They're now at 2.54%, 8 basis points higher than where we looked at them on Friday. On the exchange rate, we start the week noticeably lower. The New Zealand dollar is currently at 84.5 US cents, a 3-month low, at 91.4 Aussie cents, and the TWI is now at 79. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.